Hello, and welcome to Give Me Credit. I'm J.S. Waldo, and I am here with our credit guru, John Mackey.
Hey guys.
And hi, John.
Hey,
Today
John.
is a very, very special day for us. We have a guest in our podcast, and we are going to be joined, or we are joined, he's sitting right here. We're joined by Gerry Weston. Hi, Gerry.
Hey, how are you, JS?
Good, thank you. Gerry is a veteran financial services executive and credit risk strategist with more than 3 decades of experience shaping how lenders think about growth, risk, responsibility. Over the years, Gerry's has guided institutions through some of the most challenging economic cycles, from the Great Recession to the pandemic, helping teams build resilience while staying grounded in data, strategy, and sound judgment. His leadership has spanned consumer lending, fintech. Is that how you say it? We're fintech?
FinTech. It's FinTech.
Fintech. There it is. Fintech innovation and portfolio management, always focused on one essential truth. Credit isn't just about numbers, it's about people. He's known for bringing a calm, strategic perspective to turbulent times and for reminding the industry that absolute stability comes from understanding both the data and the human stories behind it. Please, everyone, join me in welcoming Gerry Weston.
Thank you. That was a very generous introduction.
It was a lot. You are quite the experienced executive over here. You have a lot of knowledge. We really appreciate you joining us and bringing that knowledge to us and to our audience.
Thanks for the opportunity.
Yeah. Gerry, today we're going to be talking about debt relief organizations, what they promise, what really happens, and why the safest path might be simpler than you think. Now, Gerry, we've discussed this before, but you've got a story that perfectly illustrates what can go wrong when borrowers put their trust into the wrong hands.
Sure. Well, a little bit of history. Back in 2023, the institution I worked for took a loss. We charged off a loan. Just so that your watchers know, when a bank charges off a loan, we remove it from our balance sheet. We make the assumption that we will no longer be repaid. We can no longer carry it as an asset, and the loss is recorded. Over the course of time, we made a determination to litigate. The consumer wasn't speaking with us. We had no communication. We had no direction. Over the course of time, we did secure a judgment. And earlier this year, the consumer reached out to us and said they wanted to work it out. Our institution prides itself in working with its consumers. And so we stalled all action. Understand, we had a judgment. We had something that was actionable. We could have attached assets. We could have put liens on property. Instead, we listened to the consumer who at that time had signed on with a debt relief organization. We sat on our hands, for lack of a better way of putting that, as a courtesy to the consumer, as a courtesy to the relationship, out of respect to the relationship with the consumer. And over the course of 90 days, outside of me receiving a personal POA, power of attorney to speak directly with the debt relief organization, we heard nothing, pin drop. After about 90 days, we realized we weren't hearing from the consumer anymore. The debt relief organization had not contacted us outside of the initial contact, and we made a determination. We decided to act on that judgment that we had. Through the course of an investigation, we identified assets and were able to secure over $10,000 outstanding. Our consumer was distraught. Our consumer believed that they'd been working with a debt relief organization, and that debt relief organization was communicating with their creditors. The money that they had was intended to satisfy multiple debts, multiple obligations with other creditors. Because of the debt relief organization's failure to respond to any of our communications or to maintain communication with us, we had to act. We do have a responsibility to our members. And we We did eventually negotiate settlement of the remaining balance with the consumer, but the delay in action by the debt relief organization led to a worst case scenario. It led to other creditors not being satisfied and our institution being satisfied, but walking away with a dissatisfied consumer.
So when the DRO contacted you, and we're talking about a debt relief organization contacted you, what did they say initially?
Their initial comment or their initial statement was, this consumer has contracted with us to negotiate their debt. We're here to negotiate down their debt obligation with our institution and with all other creditors.
Okay, so then you got a POA so that you could talk to them directly, and that's basically it's like you no longer contact the borrower because you're working as a courtesy with the debt relief organization. So you said you waited over 90 days for them to do something, and they never did anything other than tell you to stop talking to the borrower.
Yes.
So you wait 90 days, which was very nice of you. That was a great courtesy. So then when you had to make the business decision and you went forward with the judgment you already had that you had so kindly stopped acting on, when you spoke to the borrower, what did they say?
They were upset. Their impression was that the debt relief organization was in regular contact with their creditors. What they found out over the course of a couple of days after our garnishment, after our attachment, after contacting other creditors involved in the pool through the contract with the debt relief organization, none of them had been contacted.
Interesting. So you mentioned that things end up worse because you actually had to attach to her assets to pay part of this debt, and those assets in her mind had already been set aside to pay other creditors. She was thinking that everything was being worked out and she was doing the right thing.
Right. It was again the consumer was distraught. The consumer had a plan. The consumer had a long-term plan. They suffered through some credit losses, and they were on the rebound.
So they were basically talking to the wrong person with the assumption that this debt relief organization was going to take care of the issue. Is that correct?
That is correct. That is correct.
Yeah.
One thing that you and I talked about, John, was speaking directly to the creditor.
Right.
We, my institutions like mine, it's in our best interest to negotiate. It's in our best interest to take in payments, pre-charge off, post-charge off. It is in our best interest reputationally. It's in our best interest financially to take those steps. These debt relief organizations charge between 15 and 25% of the total debt obligation.
Okay, well, let's hold up a minute. Before we go into that, let's make sure that our audience understands. For people who do not know, what do debt relief companies claim to do?
Debt relief organizations act as a middleman. They take your debt, your credit cards, your personal loans, more often than not unsecured credit, to be clear. But they can take in your car loans, and they reach out to your creditors individually and negotiate, more often than not, settlements for less than the full amount owed. They negotiate these settlements through either payments or through lump sum, more often than not payments.
Okay.
It requires the financial institution, more often than not, to stop accrual of interest, to take a haircut. More often than not, we take a discounted amount of the full obligation.
Okay, so what do you think is the biggest misconception consumers have about these services?
One, I would say the biggest misconception is that their creditors won't directly talk to them, that a middleman is necessary. As I said earlier, most financial institutions have entire teams dedicated to resolving. And these organizations are populated by people. We've all gone through hard times, and I'll say over my 30 years, you're not going to get a more sympathetic ear than a collector, a first party collector, the actual creditor. I won't speak to third party, but first party collectors are trained to resolve, to collaborate with the consumer.
Okay, I want to take this moment to make a very huge distinction here for our audience. Before, John, I know you had some things you wanted to say as well.
Right.
There is a big difference between a debt relief organization and the other types of companies that we've been talking about, which are the credit repair companies. Credit repair companies are fraudulent. That's not what this conversation about. This conversation is debt relief. You literally are seeing commercials for this on TV right now, which is why we're talking about this.
Right.
So I wanted to
Right.
just make that differentiation.
Are any, you worked with many of these, I would assume, the debt relief organizations. Are they legitimate or are they all risky?
You know, I'll speak to my experience. I've seen very few that are effective. Are they legitimate? They're licensed. Are they legitimate? 40 states require that they be licensed. 40 out of 50 states.
Right.
They're recognized by the better. Yes, they're legitimate. The BBB recognizes them as legitimate organizations. Having said that, over the course of preparing for this call, the Better Business Bureau also has a scam alert out for many of these organizations.
Okay, so the company we're talking about here specifically was a company that is a large organization. And they, in my estimation, based on what you told me, made some big mistakes here. But I just have a hard time understanding how these organizations can take somebody's money and not negotiate. I don't know if it was dropped. I do know that they're supposed to be licensed, but I've also found in my career working with credit debt collectors that a lot of times they try to collect a debt in states that they're not licensed in. So how do you determine that, or do you determine that? Do you assume that they're do you assume that they're legitimate? Do you look that up? Do you have a database of places you work with?
There are databases available. The organization that I'm speaking, the debt relief organization specifically that I'm speaking with, we've received correspondence from them for years. They were vetted, I want to say 5-6 years ago. We haven't recertified them. We haven't rechecked to make sure that they're certified. But I do believe them to be a legitimate organization. The delay, the delta is the delay. The delta is. These organizations are populated more often than not. They're not unlike call centers. And so the parties on the other end of the line aren't financial gurus. These aren't accountants. These are individuals who collect information, pass that information on to another party, who then draws up the contract, draws up the terms of the contract. Who gets paid, what they're going to get paid. At that point, proposals are sent out. I suspect that the biggest delta for these organizations is that delay. Is a one party taking in the information, another party making calculations, and then relaying that information onto the creditor. In this case, this took 90 days. I would love to be able to say that that's unusual, but it's not.
Got it.
Our collections manager reports directly to me, and anecdote by anecdote. We see these, and frankly, our collectors cringe. Our collectors know that as a financial, again, I say it again, it's in our best interest to negotiate this directly with the consumer. When you look at the amount of marketing that we put in to build a relationship with the consumer, a third party comes in as an interloper. And while We're going to,
Let me ask you this next question here. I wanted to delineate between a credit union and a bank. We're talking now from the credit union's perspective. And from a credit union's perspective, which is who you
yes.
work for and on behalf of in loss mitigation, why is it so hard to work with third-party debt negotiators?
Uh, Again, I attribute communication. I attribute communication directly to them. I attribute the loss of context on the part of the third party. And credit unions, as we've discussed, spend years building a relationship with our consumer. Our ideal consumer took their first credit card, got their first car loan, and has their first mortgage with our institution. We grew up with them. That's our ideal. We don't always meet that ideal, but when we're speaking to a third party, they have zero context as to what's gone on before. They're unprepared to have that discussion. These negotiations very much come down to numbers. We're offering this, no, we need more than this. They go very much back and forth. Conversely, if we were to speak directly to the consumer, those conversations would go smoother because we do have that past context. We do have that relationship. When we're being told about the hardship, we can relate in an empathetic way. A third party, they're contractors. I don't disparage them. Every industry has its ups and downs, but they're.
So do these DROs, the debt relief organizations, they tell the consumer, they tell your mutual customer to ignore you?
Yes.
They give that direction.
All communication cease. And as you mentioned earlier, as a courtesy, we comply with that.
Yeah, that's very nice of you. You're trying to be patient and help the borrower. You may not agree that they've decided to sign up with this DRO, but they're your customer. I get that. So when this particular one happened and you decided to pursue, well, you made the business decision. You don't have a choice. You made the business decision. Okay, well, we already have the judgment. Obviously, nothing's happening over here. You didn't contact this borrower because you weren't supposed to? Is that why you didn't do it? Okay.
Correct.
So what do you think maybe the warning signs should have been for her?
Well, the biggest warning sign was the fact that she still had money in her account. She's paying a subscription fee. She's paying a monthly charge, but she's not seeing big lump sums leave her account to satisfy her creditors. That's the biggest.
Yeah, and when you said she was like really shocked, did she ever say that she had spoken to this company every month and she thought everything was fine?
That was one thing that she mentioned. She was following up, or they were following up with each other. And I don't know what the content of those follow-ups were. It couldn't have been much. Again, after our after our bank garnishment, in fact, she contacted the other creditors and left disappointed. And this is a side note, but credit unions also have focus on financial education. We could have helped her negotiate with her other creditors. Not unlike issuing a personal loan to satisfy a consolidation loan to satisfy other creditors. We've done things like that. It's fear, it's shame. A third party speaks on your behalf. I understand it. I can't say I'm not sympathetic, but I also can't say it's not frustrating because the consumer walks away unsatisfied.
So basically her silence of not talking made it worse.
Yes.
Can I back up here a minute? When you sued her, you obviously had to take it to court. You have to notify her that she's going to court, that she should show up. In this particular case, did she?
No. And
that was part of the, I want to say, ignorance on her part, that she just ignored you, which backs up the fact that in my estimation with debt collectors, when they do this, 95% of the people out there don't show up to court,
Right.
and the creditor wins by default. Now, had she come to you at that point and said, "Okay, you got my attention," you would have backed off and you would have negotiated.
Mhm.
Is that correct?
Very much so. Um, let's look at how credit unions let's look at how financial institutions solve their debt. Once we charge something up, we have to look at the resources in house. Do I have collectors to continue to pursue this? More often than not, I don't. So I ship it off to a collections agency. They're going to charge me 25% minimum to satisfy it, 25% of which I can't recollect. It is in, I can't say this I can't say this more profoundly. It is in everyone's best interest that consumers work directly with their creditors, especially if it's a credit union. Money's lost all around. This is
Yes.
this
Hmm.
is an entirely unnecessary circumstance. I say it again. I get it. There is shame. There are stigmas to being in debt. There are stigmas to there's stigmas to asking for help.
Yep.
And the third-party debt relief organizations step in, and they relieve, at least temporarily, the shame that comes with it, because then the consumers can say, "I did something. I've taken an action," without recognizing they've delegated and delayed any future pain. Um,
Jerry, we had a conversation prior, and you said that 90% of the cases, let me look at my notes here, 90% of collections leading to you having to take action are because the consumers went silent. Why is that? I think it's mainly what you're saying. You're saying it's fear.
Fear. It's fear. This is anecdotal. As you mentioned earlier, I went through the 2008 recession. I went through the pandemic. I went through the dot-com boom. I am older than I like being, but what I will one thing that I experienced in 2008 and 2001, the strongest credits bury their heads deepest. They are not accustomed to being in debt, to not being able to satisfy their obligation. I would argue that in 2001 and 2008, where we saw the most satisfaction, were with your B and C borrowers, because this is their world. I don't manage collection floors anymore, but I used to. And when I did, I let my collectors know readily. They know more than you. Your B and C creditors understand collections better than you do. So work together. This is where you collaborate. This is where you learn. You can't do the job without showing empathy and understanding the dilemma of the other side. Once you
Right.
gather that understanding, you can come up with a workable plan. The challenge is just that. And the impetus to come up with that workable plan is more on the financial institution than a third-party contractor. Again, I don't want to disparage debt relief organizations. Some of them are effective. Some of them are, in fact, helping consumers. But whenever the red flags start going off and we start worrying about a financial crisis, as we've said multiple times, the commercials come in barrages.
Mm-hmm.
Tell what's going on in the world based on what you're being advertised. And these debt relief organizations jump on a bandwagon to their businesses.
Right.
They generate revenue. That's what they do.
Yeah, we're seeing that with
Right.
the amount of people that are going into debt right now, or that are in debt that are, 120 days plus late. We're seeing a huge influx of that coming in. And now, with the CFPB being dismantled, there is no police force taking care of some of the egregious behaviors that happen. I'm not saying that I believe that a creditor should have the right and the obligation to go after the debt that is owed to them. Where I've got the problem is when they sell that to third-party debt collectors. And this is where people get afraid. They bury their head because they've heard horror stories of people being abused and beaten up.
Mm-hmm. So with that, Gerry, why don't you give us an example? We're getting kind of close to our threshold for today's podcast, but I don't want to end there right now. What I think we need to know, Gerry, is if you know what happens when a borrower picks up the phone or responds to a letter from you, the first creditor. Is there a good example you can share where communication did make a difference?
Absolutely. I I work on both originate and I'm in charge of the collectors. Um, but again, I spoke to personal loan options. Um, we have, I can't think of a specific example, but we have consumers who have been in financial distress, where we've provided consolidation loans and satisfied other, I have the advantage of working on both sides. We've satisfied other creditors' debt based on the relationship. Understand, and I know there's a greater reliance on technology than now than before, but relationships still lead the day. If I have a consumer who has been with our institution for 20 years, uh, and their FICO is distressed and their financial situation is distressed, but they can demonstrate income. They can demonstrate that they can satisfy a consolidation loan. I'm going to put them in that consolidation loan. Why? Life is short, but it's not that short. If I can satisfy your obligations in 3 years, 5 years, if we can work together and satisfy that, you've not only satisfied your debt, you walk away with a relief. You walk away with a greater loyalty to my institution. And we've built a real relationship. While I can't, I've got a couple of, as you said, I've worked for a long time at a lot of organizations. I do remember at one credit union, there was a gentleman who ended up filing Chapter 13 after much distress. And after, we will never tell a consumer to file bankruptcy, but
Nope, you never should.
we'll discuss this is what will happen if you file bankruptcy. And this was a situation where a Chapter 13 was that consumer's best option. Uh, for the and I was at the organization for a couple of years after we worked that out, and every time he made a point of coming into the institution to make his payment.
Right.
And it was property, so we were getting paid outside the plan, just for your viewers to understand that. But he came in and point of asking for me, big guy, and I'm not a small guy myself. This guy was 6'3", 6'4", and I'd walk up to him and I'd say hi, and he'd draw me in with a big hug, because someone took the time to say, the world's not over. This can be fixed. It may not be fixed in a way that we all walk away happy today, but if we're happy tomorrow, if we're happy in a year, if we're happy in 2 years,
Yeah.
if your quality of life improves because we did this thing, that's a win. That's the win on the inside.
Right.
That's one on my part.
Yeah, that's a great example. And again, for those who don't know, a Chapter 13 bankruptcy, again, we're not attorneys. We are not suggesting it for you. But just so you know, with a Chapter 13, that's a workout plan. That's a workout plan from the court. And it's an option that is obviously open, but by doing that, by explaining that to your consumer, to your which customer, I mean, you had a relationship with them, by just explaining what it meant, you provided information that that person didn't have, and they were able to take action themselves. As John says, by sharing the information, by educating, as you put it, also Gerry, that person was able to stand up, speak for themselves, take control of the situation. And that's why we're here talking about this today. We're not here advocating for Chapter 13. We are advocating to call your creditor. Look at Gerry. See, we could call and talk to Gerry ourselves. He's not so scary. He wants to hear what's going on.
Oh, wait a minute. I find Gerry a bit scary.
Well, this is John. Did you have another question you wanted to ask real quick?
No, other than I do want to do another podcast.
Yes.
And I want to we will review that information that we've gone through today in that other podcast, and to go on speaking of this particular topic of debt consolidation, because I see so much fraud out there in this, the potential.
Yeah, you're referring to debt relief,
What did I say?
debt consolidation.
I'm sorry, debt relief. Yes.
Yeah. Yeah. And Gerry, and I really do want to thank you for coming on, because we would love for you to come back. I love the information you're giving. I think that our audience will find great value in this. And if you're willing to, I'd love to take this conversation further. John and I still have questions, and
Yep.
I think you have a lot of educational information to provide. Are you open to that?
I'm more than open to that. I would be more than happy to join you guys again. Yeah.
Excellent. Excellent. Then for now, I want to thank you for your time today. And we're going to end this podcast on a positive note, but we're going to remind you, because we always do, if you have not gone and pulled your credit report, where are they going to do that, John?
At annualcreditreport.com.
Exactly. You need to do that for yourself. Protect yourself, know what's out there. There's lots of changes happening out in this world. It's scary, but know what's out there. And as Gerry has said, especially if it's a credit union, please, if you're having issues, pick up the phone and talk.
Right. Right.
So for that, we wish everybody a lovely day. And if you have not, please subscribe, follow. You can do this on Substack. Follow John, follow myself. If you're watching on YouTube, you know the deal. You have to subscribe. Click that little bell so you know. Every week is a new episode. And next week will be Gerry again. I can't wait.
Great. Thanks, Gerry.
Great time.
Bye.
Bye-bye.